US equities just had their fifth consecutive losing week. The Nasdaq is down 11% from year to date. The Dow also entered correction territory, and of course, the S&P, like we have been tracking, is down 9.5% from the yearly open. That doesn't seem like a lot for us crypto investors who are used to the volatility, but 10% off of the recent all-time high is a very bad signal for US indices. And we all know Bitcoin, like any other risk on asset, follow US indices. So this is very important. We have to keep watching this. Uh, this is mostly because of the situation that's going on in Iran, but also a second war front seems to be opening in Yemen. So Yemen's group called Houthis has launched missiles at Israel. So they're on the side of Iran, and they are threatening to close another strait, which is not Hormuz. It's called the Bab al-Mandeb. So we will cover strategically what this means and whether this will actually happen or not. I will also give you guys some of the current market commentary on the macro. So there has been a new speech carried out by Powell this morning. This is going to be his final speech before he leaves his position in May. And the Fed is reacting a bit with their prediction market odds. We look at treasury yields, and we also look at some market bullets for today to cap things off. Okay. So we have to cover the US equities because you guys will see a lot of these numbers and these so-called correction news pieces over the next couple of weeks. Markets end sharply lower as oil surges and investors digest the Iran news. Meanwhile, Nasdaq, Dow Jones, S&P 500 all enter correction territory. And if you're only coming from crypto, you'll look at the correction, you'll be confused. Like, this is the chart of the S&P. Where is the big correction? Well, because the S&P index and all of the other US indices, the large caps, these are very solid investments that are not meant to be very volatile. So usually 10% is the number. 10% not from a daily time frame, but from the all-time high. So anytime that on a yearly time frame, the S&P goes down more than 10%, that's official correction territory. They never really say it's bear market because US indices have never been in, decade-long bear market, so to speak, except for 2008, which, I mean, you can even argue for that. But at least they will say correction. So that 10% mark roughly correlates with a close below the 200-day simple moving average on over one whole week. So this is the signal we have been covering, is we don't want the S&P, the Dow Jones, the Nasdaq 100 to close below the 200-day simple moving average and stay below it for more than 1 week. You'll look at some of these headlines from today. The Dow Jones has officially entered correction territory. It'll look, red, but you see the drawdown percentage here is 10%. That's the number to keep in mind. 10% is enough to cause market panic in US indices. Here is another one that you'll hear. So Nasdaq composite index, or the Dow Jones DJI, or SPX, S&P 500, all the same. They all use 10%. So the reason why this applies to even crypto, especially Bitcoin, is because Bitcoin right now is acting like a risk-on asset. It's not following gold. It's following US equities. And we have done this analysis before on the channel. It's about a 2x multiple in terms of volatility. So since the S&P is down just about 10%, 9.2% from the top, it's likely for it to draw down further. And the number we have looked at over the past couple of weeks is something like this, where if the S&P closes below the 200-day SMA for at least one whole week, then it's likely to head much lower, ending at about 13% below the 200-day SMA at least, something like this. So you can draw that comparison from the 200-day SMA until 13% down. We're looking at 5,700 range for the S&P, and then you can take that level and say, okay, from current price of 63.50 until 57.30, that's about a 9.6% drawdown. You take that, you times it by 2x the volatility multiple for Bitcoin, you have something like 19% of drawdown possibility if the S&P goes down to 5,700. So 19% down from current price, that is roughly 53,000 to 54,000 range. So you have to be prepared for this, and this is why it matters. It's not because Bitcoin is especially bad in this conflict or it's affected way more so than other stuff. It's just everything is following the U.S. indices. Okay, so let's look at some of the fundamental stuff because we already have covered the technicals quite in depth over the last week. There is a new war front that's potentially brewing, and that is coming from Yemen. So there's a group called Houthis. Again, I'm probably butchering all the pronunciations today. Just bear with me. They're from Yemen, and they are joining the war by launching strikes on Israel. So I'll bring up my notes here, and I'll give you the summary that I wrote. So this is the biggest news development of the weekend over this conflict. So Yemen's Houthi rebels, backed by Iran, have launched missiles at Israel on Saturday for the first time since the war began. These projectiles were intercepted by Israel, but the real concern is not just this fighting; it's the strait that they also control. So this is the strategic map of the region. And we have already covered Strait of Hormuz. This is the big thing that's constraining the supply of oil coming from the Persian Gulf countries. Well, they are now saying that they could be closing off this right here. This is called the Bab al-Mandeb, which also is responsible for exporting a lot of the oil and natural gases of the region, especially for Saudi Arabia, because these other countries, Qatar, Bahrain, UAE, Kuwait, they're not on this side, but Saudi is the biggest, will have the biggest impact with the closure of this. Okay, so here is what I read on the Saudi situation here. So analysts warn that Saudi Arabia may be forced to cut production amid Houthi Red Sea attacks. So the Red Sea region is right here. This is the Persian Gulf. This is the Red Sea. And you see, Saudi Arabia is also already under pressure because, well, they can ship oils with tankers out of this side or this side. Well, this side is closed, and they have been routing through the Red Sea region. So renewed attacks on the Red Sea shipping could plunge the oil market into deeper turmoil, potentially slashing global supply and driving up prices. And we have covered this about 2 weeks ago, where all of the major oil production countries, their biggest problem is that they will run out of storage for oil, and thus they have to cut production. And Saudi looked to be okay until this situation really rose, because, well, Saudi had that option to ship out of the Red Sea, but now they don't. Well, potentially they won't. Again, this is new research for me as well, because I'm obviously not a Middle Eastern expert, but I'm just learning as we go as well. So for the first time in modern history, both the Strait of Hormuz and the Bab al-Mandeb Strait are under simultaneous threat. This is big. specifically applied to Saudi Arabia. Let's see. Boom. And that's basically it. So because this is new conflict that's just started on Saturday, there isn't enough real stuff that have come out yet to say, okay, is this actually closed off or not? It looks to be just a strategic potential right now, but it's not as escalated as Hormuz. But anyone can read this map and say, okay, here are the countries that produce oil. Here are the ways that they can ship this oil out. So this is closed. We need to keep these open. And if this is closed, obviously there's going to be more pressure. But whether it is truly closed or not, and how much of an escalation is coming out of Yemen, I don't have a very high degree of confidence to say yet. But this is definitely something that could be bad. So we have to watch this over this next week. Okay. And the other thing I wanted to cover is the macro. So let me just make sure. Yeah. So on the macro front, we have been covering on every single live stream that whether you look at Bitcoin or you look at the S&P, you look at the Nasdaq, okay, down 11%, you look at the Dow Jones is down, everything is driven by this. The Brent crude oil price. And you see the Brent crude price is yet again jumping up. Probably this is in anticipation with the potential close off of this Bab al-Mandeb strait. However, I would say this hasn't happened yet because otherwise we would be already at above 120. That's what the TA roughly tells me. Because if we have another major escalation like that, we shouldn't be trading just like this. This smells way more like narrative at the moment without clear confirmation. Nonetheless, if oil price stays above 100, that will be bad. If oil price stays above 100, fully expect the S&P, the Nasdaq, Dow Jones, and Bitcoin to head lower. And the macro situation is not improving when it comes to the Fed, rate cuts, and recession. So we have already covered how the Fed is basically stuck and they cannot cut rates. Here are the probabilities of rate cuts over this next year. How many rate cuts will there be in the highest probability this year? There is 35% chance we will have no rate cuts this year. This is not because the economy is doing good. The economy is bad. Employment is bad. Unemployment rate is rising, but inflation is rising faster. And that's why since this conflict started, the chance of no rate cut went up way more from February 27th. That was 9.4% of no rate cut to now 35% chance of no rate cut. This is what the market is pricing in. And the chance of recession also has been going up dramatically. See, from February 27th, this is when the conflict started. 23% chance of recession by the end of this year to now 37% chance and rising. Very bad. So these are probabilities on the macro. There is also the pricing of yields. So the 10-year yield has also been rising and not going down despite us having high inflation. And here is the gist of this analysis. So even though we have high inflation and we have even though we have high uncertainty with flight to safety, where you see risk on assets drawing down and gold prices holding relatively well, people are not willing to park their money in treasury yields, in treasury bonds. And this is being reflected with Treasury yields for the 10-year still staying high at 4.4%. So here is the 10-year Treasury at 4.42. Since the end of February, see, Treasury yields have gone up. This is not normal because when there's high uncertainty, people want to take risk off. They don't want to invest as much. They want to park their money in safe assets. Well, bonds are the safest thing. So whenever there is higher demand for bonds, for the dollar, 10-year treasury tends to go down because they don't have to offer as much interest. However, 10-year treasuries are still up. This is very bad because there is an even higher expectation of inflation, which is dominating the market. So even though people are parking their money into treasuries, people are also expecting higher inflation to come. So they are pricing in yields to be higher. So this adds extra pressure on equities and on Bitcoin in two ways. So on equities, whenever treasury yields are high, like it has done so over this past month, going from 4% to 4.4, that competes directly with uh, investors in equities. So there will be less demand in equities because people can get higher returns in treasury bonds. So this will add to the sell pressure in equities. And on the side of Bitcoin, well, when there is rising treasury yield, that strengthens the dollar because people need to buy the dollar in order to deposit them into bonds, into US bonds. So that drives up the price of the dollar index, the Dixie. I think I have a Dixie. Yeah, I have the Dixie chart pinned right here. You see the Dixie has been up since this conflict started on February 27th. So the Dixie, the strength of the dollar is especially important when analyzing Bitcoin because all charts in the world that look at Bitcoin is pairing it with the USD, with USD stablecoins and US dollar denominated pairs. Even when you trade Bitcoin in other countries, you trade in China, you trade it in UK, you trade in whatever, they don't pair with the yen. They don't pair with the yuan in China, the yen in Japan, the euro, whatever. It always pairs against USDT. This is one of the market peculiarities in crypto. Crypto trades on crypto exchanges and they always pair with USDT. They don't pair with yen stablecoin or euro stablecoin. So that means whenever the dollar has strength, that adds to the sell pressure on Bitcoin because that essentially means for the local currencies outside of the US, for traders in Bitcoin that are not based in the US, they have to convert their local currency into the dollar to buy Bitcoin, but their purchasing power is going down. So they can buy less Bitcoin with their regular income. Let's say you deal with the Japanese yen, you earn whatever amount and you want to DCA that into Bitcoin. Well, if the Dixie goes up, that means you can buy less dollar, which in turn means you can buy less Bitcoin. So that's why whenever the Dixie goes up, it adds is special pressure on Bitcoin because Bitcoin trades as a global asset against the dollar, very specific. So that's another side that is kind of a chain reaction. That's why you do need to watch the 10-year treasury because the 10-year treasury adds uh, strength to the Dixie, which adds weakness to Bitcoin. Okay, and finally, some market bullets that I think are very interesting for the day and over this weekend. First of all, Bitcoin treasury companies, I don't know what they're doing. I mean, these guys look like they just whenever the market is up, they buy. Whenever the market is down, they sell. So since the conflict started from February 27th until March 20th, there has been 4 positive weeks of inflow. If we can zoom in on this chart, that's not showing. Let's do this chart here. 4 positive weeks of inflow here. But This final week, it closed negative. I honestly, I, I don't know. I don't even know anymore. These Bitcoin ETF fund managers, they're totally weird. Uh, there has been some news brewing that Strategy is accelerating its Bitcoin treasury purchases. So here is from CNBC. Strategy is buying more Bitcoin as their rivals are sitting on the sidelines. Now, I fact checked this with Saylor Tracker. This is a bit of older news. So you can say that over this past month, Saylor bought a lot. Okay, so there have been multiple positive buys here. If I can show this chart in depth, right here, here. Move myself here. Come on. There you go. So in the month of March, we had seen two very big buys, 1.3 billion, 1.57 billion of Bitcoin buys coming from Saylor. But Saylor has not bought since March 23rd. So I don't think this is particularly news per se. Uh, it really does look like Saylor has bought enough in this range between 63 and 72. Which is the range that we covered on the last live stream as well. That is a bit worrying, where I could see the market head next. Okay. If this range breaks towards the downside, 63, that's a very key level. The next time Saylor will come out and say, hey, I'm buying when things are cheap, it's probably going to be below 63. Otherwise, he would have fired another round of buys this week. So maybe he buys this week. But if he doesn't see that, middle of this range is cheap, I doubt he's gonna fire another big round until we head lower into low 60Ks, maybe 50Ks. Uh Here's another piece of news. A smaller strategy purchase last week. Yeah, this is already priced in. So if you guys see some of these news, make sure you get the correct date. This is from March 23rd, which is already happened back here. In the regulatory front, David Sachs, the crypto czar of Trump's executive branch, has left. So his term of 130 days in the position has finished. And basically, he does not represent the Trump administration in crypto anymore. I was very short. So I don't know how to make of this. I don't know why they even did this. It doesn't seem like he did anything at all. This is actually interesting because you need to know this person. Okay, he is 1/4 of this big, Silicon Valley investor VC billionaire cabal group. That's the All In podcast that we have covered last week on the BitTensor episodes. So now that he's back to his regular role of being a Silicon Valley VC giant leader, who does invest a lot into AI and crypto. Let's see what he's going to do next. But yeah, it doesn't seem like any sort of new crypto regulation came from him. He just was there to make some statements on the Clarity app, but he didn't really push anything through. Kind of weird. I'm still trying to get a full speech summary from this morning coming from Powell. So let's see if I can find anything here. I'm gonna try to tweet about this later, but Powell just finished a speech this morning addressing Harvard's class in undergrad for economics. And this isn't like a guest lecture, it's like a big hall where he makes like Fed related speech, not education related speech. So I believe he intended to make some comments on the Fed's trajectory, but I haven't found the full summary of his speech yet. So follow me on X. I will I will try to tweet about this in summary after the live. Uh, Morgan Stanley's Bitcoin spot ETF is about to launch imminently, most likely this week. This is the first spot Bitcoin ETF coming from a US bank instead of a fund manager. Let's see if this actually has more demand or not, because this is unique compared to everything else from BlackRock, Fidelity, VanEck, whatever. This is totally unique because it's coming from a bank. Yeah, this is about David Sachs, no longer a crypto czar. And oh yeah, finally, one big piece of news coming from Apple. So we all know that the Mag 7 are not doing too well. Mainly because, well, US indices, US stock market is overall not doing well. So Microsoft, Meta, most of the Mag 7s that are not totally AI focused, which is, only NVIDIA, are drawing down quite bad. So here is Microsoft, Meta. I mean, I don't have to repeat the chart with you guys, but from last year's highs, 788 for Meta down to 536. Here are some of the numbers. Microsoft down 23.4% year to date, 31.7% from all-time high. Cheapest valuation is Meta now. Best position that is still trending relatively high is Nvidia, because that's AI, not really tech stock. However, Apple just made a huge pivot and huge development. You guys might not realize how big this is. So, in one line summary, Apple plans to open up Siri to rival AI assistants in a strategic shift. Now, some of these people, they don't really use AI as much, and they don't really get this, okay? Look at this comment. Siri is utterly useless unless setting a timer or alarm. This is exactly why. How many people use iPhones? I know I've been using iPhone for the past 10 years. Before ChatGPT, the only AI assistant I used was Siri because of voice to wake. That's the only thing. What do I always have with me? It's my phone. What are the modes of input that I can have to talk to an AI? My voice or typing. Okay. If I can type, I don't need an assistant. I just do Google. Now I use like Claude or ChatGPT or Perplexity is the one I use the most often, but I have to type. Most of these AI things, the front ends of these AIs, they don't have good voice modes. If you have tried them, none of them are good except for ChatGPT. So this is because since the very beginning, ChatGPT was the best at understanding chat and making that voice flow very well. As far as I know, there is maybe only like two others that are comparable. You could do maybe Alexa, but Amazon's way too behind in that whole race. Like their assistant, and also they don't have a phone. You could do like Google Assistant, but Google Assistant is completely tied into Gemini, and Gemini is shit. When it comes to like day-to-day productivity assistance in AI, you can tell Gemini to do like, schedule a task for me. Okay, like remind me to buy groceries or pick up the kids or basic things. But you can't. Gemini is not really comparable to like Claude Opus or GPT 5.4. Unless it is completely open. So this is huge. Siri, you see, like even as I say Siri, my phone is waking up, so I have to avoid using that word. The voice of wake is absolutely massive. I'm forced to use ChatGPT every day when I can't type. I'm on my phone and I'm like, walking around and I want to find something. I'm completely tied into only GPT model in voice mode, whatever they offer. And they don't even offer GPT 5.4. They only do GPT 5.2 voice. I believe that's the latest one. So that means like in the chat interface, it can only do like a certain way, and they can't do very complicated like scheduling tasks. They can't use codecs. They can't do any of that because it's a closed ecosystem. You can talk to like one or two models. What this has opened up in the Apple ecosystem in Siri is massive because they not only is opening up AI capabilities for Siri, but they are launching it as extensions that's completely pluggable to every single AI model service. You can use Gemini, Claude, GPT, anything. So, and they all plug into Siri. So right now, in order to do that, you need to have like a very complicated workaround shortcut. You need to say like Siri run shortcut on ChatGPT, use whatever model, do this, and then it will route that into ChatGPT. But then ChatGPT cannot start a new convo, and it gives you like individual responses into Siri, and then you take that, and Siri itself is not intelligent. It's not plugged into Apple Intelligence. If they can do this, then every single like chat interface voice related is going to go obsolete, and ChatGPT is going to lose a massive share of the voice AI market. Uh, because even though ChatGPT is the only one that's usable, powerful enough, it's still not that powerful. Like I can only use ChatGPT for looking up like a basic recipe, or I want to search like what's a one paragraph summary of this latest conflict in Yemen, but it's not even that accurate, and it doesn't have deep search. It cannot schedule tasks, etc. But AI, Apple Intelligence is massive. If you can plug that into arbitrary models, this directly competes with ChatGPT, the front end, and Gemini, like Google front end, and even something very specific like Cloud Cowork or Perplexity Computer. I think this is massive. The only thing that I need in my life right now is voice mode to wake on my phone to trigger arbitrary, uh, powerful AI runs in like GPT 5.4. Whoever does that is gonna get everyone's market share. So this is big. If you guys use AI from day to day, you will understand the pain. The whole thing about AI using it this way, it's like, sure, you can do co-work. You can sit at your computer and then you work with the AI. You do some work. You let the AI do half the work. You do some work. But then there is the other like 5 hours a day where you're just on your phone. You're in the gym. You're driving. You're walking around. You're in the middle of a call, right? For me, if I take a business call, but then I have to edit a video and I have to prepare research for a live stream, I can't just do the call and then at the same time I talk to my Claude, I type away. I can only do one at a time. And if I can do that just with Siri, that would be massive. So let's see. I'm gonna try it out. It hasn't released yet. They said that it will be part of iOS 27. If this works well, I'm uninstalling ChatGPT right away because ChatGPT is shit. And whoever can do voice mode properly to talk to Claude, to talk to Codex, and to pick like cheaper models to talk to like Minimax, Kimi, I'm gonna use that 24/7. That would be insane. Okay, so that's just something I wanted to cover in terms of like market reaction to this. People are not understanding this, but rightly so. Apple is going to be moving big into AI. People are just saying, "Oh, it's like silly. They're making some tweaks on iOS, Siri." No, this is their play in AI. That's the feel I have because Apple has never made like models. They're not in the models game. They're in the devices game, accounts game, uh, UX game, and the one that they compete with directly is ChatGPT. Forget about like Claude, Cowork, all the other shit. They are nowhere close to the UX funnel of um, app like iPhone and Siri. And how many people have iPhones as the top-down funnel to let people use AI in this powerful way is even way more than users of ChatGPT. I don't have that number, but I'm sure like if I just Google that right now, it's probably like 10x as much of people who use Siri versus ChatGPT. And everyone is trapped right now thinking that, oh my God, Siri, stop. No, I'm not talking to you right now. But everyone is trapped in this, thinking that, oh, like, Siri is just setting alarms. No, this is their AI play. So I think Apple is moving big into AI. Okay, that's it. That's some AI related investing news that I thought was very interesting. I will follow up with this, and the next time that my Siri wakes up and it can do like some code an app for me while I'm just taking a morning stroll, you guys will understand what I mean. Make sure to follow me on X at VirtualBacon. I will be dropping my, I will be for sure tweeting about what Powell said today. I'll find a full summary and tweet that out so you guys can get that summary after the stream. And subscribe to the channel and share this video with a friend if you guys want to catch up on my latest live streams. We try to go live every single day, Monday to Friday at 2 p.m. Eastern Time. That's it for this video. Thank you guys for watching, and I will see you on the next one and the next live. Bye-bye.